All right, guys, how are we doing today? I just wanted to do a quick video. I'm getting a lot of questions about how I went about choosing my stop loss for my short hedge and why I decided to go short there and what is the method that I use to kind of calculate all of this stuff. So as I've said before, I use a lot of Fibonacci stuff. So we're going to go ahead and look at my strategy for how I was able to come up with a lot of different confluence for picking the level of the stop that I picked for the short hedge. So let's take a look at the charts. Okay, so down here, this is the pattern that I decided to trade. This is known as a harmonic pattern. This is the crab pattern. Initially, I tried to do my first short when it was a Gartley pattern, which was making this D leg about 886. So it would have been just about here. Obviously, that got invalidated. My invalidation point for this was above the X wave. That happened. My stop loss was hit. I took a very small loss. Left my long open and it kept going upwards. So that pretty much is what gave me confirmation that we were going to end up hitting 1618 up here for this crab pattern. So here's what I did with my stop loss. My stop loss in this position, as you can see, is 14202. And this is how I calculated that, right? So if we actually come down here, let's just go and take this off of the daily chart. Okay, so there's a couple ways that I was able to do this. So just keep 14,202 in mind. I'll actually just put a I'll just go ahead and put a line here. Let's just make it a different color so that you guys know. Okay, so this blue line, that's my stop up there. So the very first thing that I did was I measured this overall trend. Okay, so from this top to this bottom, and my stop is above the 1618. Then I measured our X leg, and I definitely want it above the 1618 for the X leg, which it is also above. So then what I did was I measured from B to C, and I want it above the 3618. It is also just barely above the 3618 here. So this gives a lot of confluence with where the stop loss actually is. And then if you actually do one from here to here, which was just this last high on the micro, it's also above the 2618 extension as well. So that was pretty much my reasoning for doing that. But why did I enter? Well, I was entering because on a lot of the smaller timeframes, it was starting to form just a lot of bearish divergence. We were getting a lot of higher highs in price and a lot of lower highs on the RSI, particularly on our 4-hour chart that you can see here. Same thing happened on our MACD. We got a lower high compared to the price, lower high on RSI compared to price. So I knew that this was going to end up be flipping soon. And the RSI was lining up very well. And I had confluence in my trade idea along with the harmonic pattern. All right, so let's actually take a look at our Ichimoku cloud on some of these lower timeframes, right? On this 4-hour chart, man, we've had a really nice reaction, lots of really, really good support down here. We've got a really strong bounce that we had when we tested the 50 EMA at about 12,900. My first take profit for this position was at 12,950. So that actually ended up hitting this morning. And I just previously moved my my stop loss actually into break even for this position, so that it's a risk-free trade. So on this 4-hour chart, we did get a really nice pop off of our 50 EMA. And what I'm expecting to happen is that if we don't hold here and we don't see a kind of continuation from where we're at on these lower timeframes, I would expect us to probably be testing this previous yearly high here at about 12,500. Obviously, if that doesn't hold, we'll have to take a look at that later if that in fact doesn't end up holding. But for right now, everything is looking really good here. We've got a really strong bounce here. Obviously, the 50 EMA on the 1 hour chart is the 200 EMA. So we've got a really strong bounce here, really strong bullish candle coming up to retest our 100 EMA. It's looking like it's having a little trouble at the moment, but not really too big of a deal. I think that we'll probably end up seeing a retest of the 50 EMA on this smaller 1 hour time frame. To stay bullish on the 4 hour chart, all we really need to do is see maybe 2 or 3 candle closes above our Tenkan-sen line here. That's our blue line. As you can see, that's pretty much been acting as support. The Tenkan-sen, Kijun-sen has been acting as support all the way up. And normally, as soon as you reclaim that, once you get like 1, 2, 3 candles, normally you see some kind of a reaction there. Same thing happened here. We had 1, 2, 3 candle closes above. We retested it one time, and then shortly after, we got this huge reaction off of that. That's a pretty typical thing of Ichimoku clouds, so that's something that I'm going to be watching. Now, if we end up coming down and retesting our 50 EMA again, that would probably be a sign of weakness to me. I wouldn't like to see the 50 EMA tested again, and certainly I wouldn't like to see any 4 hour closes below it. If that does end up happening, normally, if we end up falling below the 50 EMA, normally we're below it for quite a substantial amount of time before actually correcting and then moving back up. So that's pretty much just what I wanted to get into today. I didn't want to do too much in-depth analysis. This was just kind of like a position update type of thing. So if you're new to the channel, I really appreciate you joining. Make sure that you smash that like and subscribe button so that you don't miss out on any of my future tutorials or analysis videos that I'm doing in the future. And I hope that you all have a wonderful rest of the week. Happy trading.